Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about silver. Now, as usual, to keep the video as educational as possible, first, I'll give you the technical aspect for this market. Then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders. And then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which is in a very clear uptrend. The market has been creating a series of monthly higher highs and higher lows, and very recently started a very strong impulse phase to the upside. We had this huge impulse, and all this push to the upside is fueled by strong institutional buying, which again is something that we will speak about in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market here on the monthly is in a strong uptrend and drop down on the weekly time frame. From a weekly perspective, we can see the similar thing. We can notice the uptrend. We can notice the creation of all these, in this case, weekly higher highs and higher lows. But most importantly, if we zoom in into the most recent price action, there are two things that really should catch your attention. The first one is that the pattern that the market here is creating is an impulse to the upside followed by a correction. And if you want to measure the correction after an impulse, you have to take your Fibonacci from the low to the high of the impulse leg. And if you do that, what we can see is that the market has just retraced to the area in between the 0.32 and 50% retracements. Now, this is a quite important zone because it is a confluence of demand and support zone. And when there is confluence of support and demand, there is increased probability of seeing institutional buying, further increasing the probabilities of a potential rejection to the upside away from this area, which, as we can see, is already what the market has started. The second thing that should catch your attention is this shape of this candle, which the market has just printed. In fact, last week, the market created this candle here. Now, this is a candle with a very long wick and a green body. Now, usually when you see a candle like this, so a candle with a very long wick and a green body, on the lower time frames, so in this case, since we are on the weekly, on the daily time frame, what we will usually see is an impulse and a correction, in which the correction is exactly the wick that we see on the weekly time frame. Because as you go down on the time frames, you obviously have more granularity on the amount of price action that you see, obviously. So this is the most common pattern in the market. You have an impulse, correction. The next logical step would be the continuation to the upside and the creation of a new daily higher high, because that is how the market moves, right? The market moves with a series of impulses and corrections. So if we have an impulse and correction, the next logical step would be a new impulse to the upside, which means that the next candle, so the candle that we're currently in, should at least try to fill in this wick. Just a quick interruption. Let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. Now, from a daily perspective, the situation is clear. We had first the start of this correction. The market then shifted with the creation of this inverted head and shoulders and clearly inverted higher. So essentially, this is an inverted head and shoulders, because if you're seeing the market create lower lows and lower highs, then we have the market which essentially creates a lower low, what then goes and creates an equal high, a new higher low, and at that point, essentially the market inverts and creates the inversion to the upside and the inversion of trend. This is essentially an inverted head and shoulders. So we went from lower lows and lower highs to left shoulder head, right shoulder, and at that point, the inversion of trend is happening. Now, In a situation like this, that is exactly what happened here. Now the trend is bullish with a new daily impulse to the upside. So here on the daily, we have exactly what we wanted to see on the weekly. So an impulse to the upside followed by the correction. This correction is exactly the wick that we see on the weekly time frame. Now also here, as we have done previously on the weekly time frame, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg, right? And also here we see and find a quite interesting area, which is this one right here. Now, why is this zone interesting? Because it is the previous resistance at which the equal high of the inverted head and shoulders was created, which is also the area in between the 0.618 and 0.786 Fibonacci retracements are placed, which means that actually we have confluence of support and demand inside of this area. And as we said previously, inside of a confluence of support and demand, there is an increased probability of seeing institutional buying. So this means that there is an increased probability of seeing institutional buying inside of this area as a confluence of support zone. Now, if we move to the commitment of traders analysis to see what institutions in the market are doing and how they're moving and shifting their orders, the first thing that we have to notice is that if we're looking at the data for silver, we're actually already looking at silver against the USD, because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, before even we stopped getting reports because of the US government shutdown, the net positions were anyway already increasing. We went from 44.2k net positions up to 52.2k net positions. So before we stopped getting reports, institutions were increasing their net positions. So there is the probability that they continued adding their longs, and this further increased the probabilities that we could see a strong silver with 695 longs added with the last report that we have, and 50 shorts, around 43, so around 50 shorts getting closed. Now, this increases the probabilities that, again, we could see institutional buying inside of this area. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now, back to the analysis. So in a situation like this, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to at least try filling in that wick that we have previously identified on the weekly time frame. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis. And you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education. And I will see you in my next video.